The Exchange at 25 Broad, sponsor of this webcast, invites you to visit our remastered model residences.
Good day, I'm Abby Overton, and this is The Real Deal. At the top of the news, Leona Helmsley's death may mean her properties will be put on the market. Residential property foreclosures rise 55% in New York City. And could Harry Macklowe lose his prestigious properties when his short-term loan comes to term? That and more on The Real Deal webcast this week. But first, some highlights from this week's interview. With the subprime woes hitting the residential market and banks tightening their lending practices, perhaps it was only a matter of time before the virus spread to the commercial market. In the last 2 weeks, the pipeline has changed for low-cost debt via commercial mortgage-backed securities, or CMBS, a popular way of funding commercial property sales. Debt is harder to get and it's more expensive. So how's the New York market responding? I spoke to Nat Rocket, Senior Vice President at Jones Lang LaSalle's Capital Investment Property Sales Division, to find out. Many real estate experts agree that the commercial sales lending market has been spooked by the fallout in the subprime world. Have you seen this reflected in building sales?
We haven't yet seen it reflected in the data, but I think we've certainly seen it reflected in the attitude of the investment sales market.
Some are even saying there could be a price correction that's as deep or deeper than the one we saw in the late 80s, early 90s, when commercial properties lost 60% of their value. What do you think?
It's wishful thinking on the part of bottom fishers.
For the full interview, click on the link below. And now for the news. Leona Helmsley, who held properties worth at least $2.5 billion, died last Monday at 87 and left behind marquee buildings like the Park Lane Hotel, which may be put on the market. 4 advisors, led by John Cody, operated Helmsley Enterprises, and Cody is expected to be one of her will's executors, who will evaluate whether her properties should be sold. Disturbing signs that the subprime debacle is affecting New York appeared in recent foreclosure rates. RealtyTrack reported that foreclosures increased 55% over the past year. That amounted to 126% in Queens, 54% in the Bronx, 51% in Brooklyn, and 12% in Manhattan. Staten Island recorded a decrease in foreclosures of 5.7%. It's been all the buzz in the New York real estate world. Developer Harry Macklowe could lose control of his properties in a tightening credit market, according to some news reports. Macklowe quickly bought 7 midtown office towers in February for almost $7 billion, but used only $50 million of his own capital and used previously purchased properties as collateral. Much of the debt is short-term and must be repaid in February, and as credit becomes tougher to get, Macklowe may have difficulty refinancing. An August report by the real estate group that said rents had dipped in Manhattan has been disputed by Gary Mallon, Chief Operating Officer of City Habitats. According to the report, a Soho one-bedroom in a building with no doorman rents for an average of $3,400, down from $3,800. The real estate group's COO, Daniel Baum, said that vacancies are higher than expected for August because landlords raised rents too much. The Wells Real Estate Investment Trust II has purchased 222 East 41st Street. The 25-story, 391,000-square-foot building was sold for $319.8 million. Zeta Series of Katona, New York, earned a $109 million profit after paying $210.8 million for the Class A building in 2004. The building was designed by HOK and earned the 2002 Build New York Award for new construction. A hotel and condo are coming to Park Avenue South and 29th Street, both from the developer of the Meatpacking District's Hotel Gansevoort, Michael Achenbaum. The new Gansevoort Park, a 9-story, 225-room hotel, will cost about $200 million. The 142-unit, 34-story condo building, 29th Park Madison, will feature units ranging from about 500 to over 1,300 square feet and start at $625,000. Brooklyn's office vacancy rate stands at about 10%. According to a second-quarter office research report issued by Marcus & Millichap Real Estate Investment Services, property owners should be able to raise asking rents by 6% this year to $26.95 per square foot. A median sales price of $339 per square foot was recorded in Brooklyn over the past year, a 27% increase from the previous 12-month period. A West Harlem Community Board voted overwhelmingly against Columbia University's push for rezoning. The board voted 31-2 against zoning changes for the university's planned $7 billion expansion north into Harlem. Planning officials say they will consider the vote before making a decision. The 17-acre expansion plan includes new buildings for the arts, business, and sciences, along with a public high school. Thank you for joining us for this edition of the Real Deals webcast. Remember to click the link below for this week's interview. Please join us every week for the latest real estate news. I'm Abby Overton, and this is The Real Deal.